Are we live?
We should be. We should be live
Yes,
now.
it says
We
we
are.
are live. Hi, Nakia. How are you?
Hi, Marsha. How are you?
I'm doing just fine this
Yes.
Wednesday evening.
We just had a nice conversation, everyone. So we're kind of
Oh,
laughing it up a little bit.
as we typically do. We have
Do.
a very good relationship, a business friendship relationship. So it's good. Hello, everyone, and welcome to our Wednesday evening investor chat.
Yes.
And
Welcome, welcome.
glad to have you here. We're going to go ahead and get started.
Mhm.
Because this information it's a lot of information here, and I don't want to keep you too long. Be respectful of your time as well as mine.
Mhm.
So let's go ahead and dig in to the topic of today.
So,
So we've been talking about these has it been six? I think about 6 weeks.
6 weeks.
We've been talking about putting together a written investing plan. And we're going to summarize everything at the end.
Mhm.
But that's what we've been able to do. That's what we've been doing the last 6 weeks. And so we're going to continue on with this topic. And the topic is diversification.
So,
Yes.
what is diversification?
Well, when we talk about diversification, let me just point this out. We're talking about diversifying with your personal stock portfolio, because when you hear the word diversification,
Mhm.
it can also mean your entire investments, like
Mhm.
your stocks and your bonds and your cash and cash equivalent, real estate. So, and that's diversifying according to your asset classes. But diversifying here, it's going to be a lot more focused and talking about, hi, Sabrina. And we're just going to talk about the stocks that you have in your portfolio.
Mhm.
So, when we talk about diversification, when we invest, the goal for investing is to get a return on the money that we're investing in.
Mhm.
That's that's what it's all about, and we want to get uh, as large a return as we can, and at the same time, we want to minimize any losses
Mhm.
that that happen, because it's the stock market. You can lose money. That's just a part of life.
Life.
That's a part of investing, but we want to minimize that. And so when we think about diversification, it is a risk management strategy.
Okay.
Yeah, so that's what
Mhm.
diversification is in a nutshell. It is a way of maximizing your returns that you get on your investment and minimizing your loss.
Loss. So it's kind of similar to, I don't know if there was a phrase you used a while back on, you don't want to put all of your eggs in one basket.
Right. I've kind of changed that though.
Mhm.
Instead of eggs in a basket, I like to think of diversifying as balls in a basket.
Okay.
Because when you think about just balls in a basket, you can think about, hey there. You can think about the different kind of balls. You can have a ping pong ball. You can have a basketball. You can have a
Mm,
baseball, a tennis ball, a football. And I think that's more representative
the
of
diversification, just
diversification.
different
Yes.
things instead of saying eggs in one basket. Well, they're all eggs. They're all probably going to be the same, look the
Hmm.
same. So there is no diversification there. That makes sense.
Yes, yes, yes. That was just me thinking about this. I'm like, that's a much more better visual
Hmm.
than just saying eggs in a basket.
Basket.
So yeah.
So
So when we
important.
go ahead.
Yeah,
So
the importance you were about to get into it. I knew you were.
yeah, why we diversify is
Diversify.
because we want to maximize returns and
Mhm.
minimize losses. That's it. But there is a way that we can diversify our portfolio. So when I talk about diversifying the portfolio, I'm talking about the portfolio as a whole, not individual stocks. So when we think of diversification, we can think about those balls in a basket. We can diversify our portfolio. Number one, look at how many stocks do we want in our portfolio. So we need to think about this because one stock is not a diversified portfolio.
Just one stock.
No, you got to have more than one stock.
Mhm.
Hi, Nancy. And so the question then comes, well, how many stocks should we have in our portfolio? How many companies should we invest in that will make up our portfolio? And I'm going to give you what the experts say, but then I want you to think about yourself and focus in what's good for you. Experts say that when you're starting to build a portfolio, 20 to 30 stocks in a portfolio can be considered a diversified portfolio. But don't freak out. You do not have to have that many. When you are just starting to invest, when you are a beginner, you're going to do this. Think about how many how many companies can I actually manage in a portfolio? And so, personally, with me, when I first started investing, my limit was 10 to 12 stocks. That's all I could handle with it at that particular time. And of course, that number has grown. But if you say, okay, as you are starting to build your portfolio, and if you get to 8 stocks and that's it, that's as much as you can handle, then fine. 8 stocks is your number until you get to the point where you can say, you know what, I think I can add another company to my
company
portfolio. But definitely not one, not two. That's not a diversified portfolio because think about it. If you got one stock in your portfolio, even if it is a good quality company, things happen.
Mm-hmm.
Good quality companies could have a bad quarter, could have a bad 2 or 3 quarters, could have a bad year.
Mm-hmm.
So then you're setting yourself up for major losses. And we want to have a good return on our portfolio. So definitely don't think that one stock in a portfolio is enough.
Yeah.
Mm-hmm. So that's the first thing. We want to think about the number of companies we want to have in our portfolio. Mm-hmm. I also want you to be aware of when you think about diversification, I was saying that think about those balls in your portfolio. You got a ping pong ball like this, got a basketball like this. So when you think about diversification, you also want to think about the size of the companies that you have in your portfolio. You can have some very large companies. They're called large cap companies. You can have some smaller companies called mid-sized companies. And this is particularly if you're a dividend growth investor, because most of our companies are going to be large companies. If you're more of a growth investor, you may have a lot of small companies, but you can diversify according to the size of companies.
So I never thought about that. I always thought of the diversifying, making sure that you have different, just different stocks in your portfolio.
Yeah.
But,
that's something to keep in mind. The size of the company. Another thing you think about with diversification is that you want to look at the sectors. Now, what is a sector? A sector is, we have 11 major economic sectors. And those are different categories that every single company can fit into. Um, Companies that have the same type of service or the same type of product can be in one particular sector. So there's a way of categorizing businesses.
Okay.
We have 11 different ones. So you have a financial sector. So banks, insurance companies, they fit into that particular sector. You may have companies that are in the healthcare sector. So drug companies, companies that make medical devices, biotech companies, they fit into that healthcare sector. Another sector may be real estate. You may want to invest. Yes,
stocks,
yes, real estate investment trust. They belong into your real estate sector. Then you have a sector, materials, industrials, companies that are what they call consumer staples. These are companies that make products that we can't do without.
Right.
Baby diapers, toothpaste, mouthwash, toilet paper. So when we talk about diversification, think about having at least 3 to 4 sectors represented in your portfolio.
I know one sector you talk a lot about is tech.
Yes.
Stocks.
Informational technology. That is a big sector. So yeah, so when you start building your portfolio, think about, okay, what sector does this company belong in? And how many sectors are being represented in my portfolio? So even if you are a growth investor, you don't want all of your companies to be technology companies. That is not a diversified portfolio.
Even if the sizes are different?
No, that because you're concentrated in one sector.
Okay. So you want to have multiples of each particular one you've mentioned.
Or at least 3 to 4 sectors represented. You don't have to have a company from every sector.
Okay.
So that's another way that you can diversify. So Nancy has a question. If you had a $500 to $1,000 extra, what would you concentrate on? Something new or buy something you already have?
Technology. We were talking about technology stocks, and look what happened.
But hey, Nancy, that's a personal decision. I think that if
we'll put that up.
So thank you.
Understand it.
If I had an extra $1,000, I personally would probably look at buying something new, because I always want to be adding to my portfolio. So that's where that watch list comes in. So I would review my watch list, and if there was a company on there that I really wanted to invest in, and that company, after doing an analysis, fits my criteria, it's at the right price, I would probably use that extra $1,000 to invest in a new company. That's my personal opinion. That's what I would do. Yeah. Good question. Good question. And so let's see, we talked about diversifying with the number of stocks, the size of the company, the sectors, and finally, you want to think about the style of stocks in your portfolio. When I say style, I'm talking about the different types of stocks, like there are growth stocks, there are dividend growth stocks, there are income stocks, there are value stocks. So you might want to mix that up a bit in your portfolio too. So these are the things you take into consideration when we talk about diversifying your portfolio, trying to get the maximum return, that you're investing in the stock market.
Mhm.
Okay. Any questions? That was a good question,
Yeah, I was
Nancy.
thinking about that too. I was looking at
Mhm,
her question, what
mhm.
to focus on.
So what would you do if you had an extra $1,000? Would you want to buy a new company or think of adding to a company?
Funny enough, I would strategically figure out how to do both.
Yeah, that's a good idea
I
too.
would strategically figure out how to do both because you teach compounding, and that's a whole nother thing
Mhm.
class. But you teach about compounding, but actually looking into stocks that are new is a good idea. So I would figure out how to do both.
Or either split it.
Split it. Yeah, that
That,
would be a good
yeah,
one.
that's see, and that's why you have to talk
Mhm.
about things because you can, you get a different perspective from anyone you talk about. Now, Barb asked about buy,
I think she said
you know,
she would buy
buy
Janome.
Genomic. Oh,
I don't
what
know.
is
Have you
this?
heard of that company?
Is that a company, Barb?
It'll give her.
Okay, I
It'll
know
give
we're
her a
on.
second, but
Okay,
we'll
so
catch her.
Nancy has another question. What's the difference between the investment stocks and dividend stocks? Oh, okay.
And then it's still three.
So with a dividend
Different.
stock, Nancy, a dividend stock is going to give you a company that gives you dividends is going to give you money from their earnings. And so, in fact, these are companies that we at Bookworm are kind of geared towards because most of our clients are more conservative and more moderate investors. So they want income.
Mm-hmm.
Dividend companies will give you income, usually on a quarterly basis based on what they earn. And so that's a dividend stock. Not all stocks are, not all dividend stocks are growth stocks. So we want to make sure that when we focus on deciding to buy a dividend company, make sure that you focus in on a dividend growth company.
Mm-hmm.
Because a dividend growth company is a company that increases their dividends every year. So it's like you're getting a pay raise every year. So that's a dividend
Mm-hmm.
stock or dividend company.
Company.
Mhm.
Barb said it's no. She
Oh,
meant the type.
CRISPR. Okay,
CRISPR, no biotech.
that's a company. That's one of CRISPR is a company that is a part of the ARC funds.
Oh,
Um, okay, what's Kathy's last name? Kathy Woods
yours.
Funds. She's the
Okay.
CEO of the ARC funds, and CRISPR is a company that there is a company called CRISPR.
Mm-hmm.
Hmm.
She
Yeah.
mentioned that this is what,
Hmm.
yeah, companies CRISPR, Intelia, and Beam.
Yes, 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 yes,
Mhm.
yes. Kind of aware of that.
Cool. I like this point someone brought up because you were in the middle of talking about investing in stocks. What's the difference between investing in stocks and then dividend growth and dividend stocks? And
Hmm.
someone mentions it depends whether or not I'm investing for long or short term.
Correct, correct.
So I think it was the answer like, what would you do with an extra $1,000? It sounds like
Oh,
that's
okay.
what his
Hmm.
question, this not question, but statement.
Hmm. So when you are investing long term,
Mm-hmm.
that kind of puts in mind that you are investing for a longer period of time, for years, maybe for 10 years or more. You've got something in mind, like you're investing for retirement, or you're investing for college for your kids. Short term, you may be investing for, I want to save up a down payment for
Mm-hmm.
a home, something like that.
Mm-hmm. And it's different. I know some people may still remember saving as you put it in the bank and it just sits there and you continue to put money there until you reach your goal. But in this case, you'll reach your goal faster because you're getting a return on the money that you're putting into a brokerage account.
Yes.
So that's another way to build a savings account. That's how I've learned through you how to use investing and short-term trading. So,
well, keep in mind that when you start, you're actually putting your money more at risk too. Yeah. So, you have to be prepared for that.
Prepare for it. That's why you're teaching us about diversifying and diversification. Oh,
so we have any other questions, especially about diversification that I can answer? Okay, so I want to, real quick, I want to talk about, pull together everything that we were talking about as we build or write down our business plan for investing, our investment plan. Some of the things we need to keep in mind. You want to write down your why. Why are you investing? Why do you want to build this portfolio? Because that's going to keep you focused, especially when you decide, when it kind of gets tedious and you don't want to do this. You have to keep that why in front of you so you'll keep going. So what's your why? The second thing you want to think of is, what are your money goals? And when I say that, when you want this portfolio that you want to build, what are you trying to achieve? Do you want this portfolio to be a $50,000 portfolio or a $100,000 portfolio or $1 million portfolio? What is your money goal for this portfolio? And then how are you going to fund your portfolio to get to your money goal? And in the case of a person who is building their portfolio for retirement and building a dividend, what's the money goal for the income that you want to have coming in from those dividends on a monthly basis? So write all of this down. What are your money goals? The third thing you want to think about, and especially since we're into dividend growth stocks, is, where do I find these companies? We talked about that previously, the last
live
investor chat we had. How do I find these companies? And finally, when I'm building my portfolio, how do I diversify my portfolio as I'm building it? So that's a kind of a summary of what we've been talking about the last 6 weeks. Okay, can you put up Nancy's?
Yeah,
that's a long one. So you have a lot of dividend to really make money from it. Yes, you have to have a number of shares, but it's a building process. Also, do you keep buying a company if it's a good company and if it's cheap, or get out? Well, because my focus is now dividend growth companies, once I have a quality company, I'm going to continue to buy shares in that company, because the more shares I buy, the more dividends I'm going to be getting. So with this particular portfolio, it's a buy and hold. I will rarely be selling these companies. Are index funds one of the best? Yes, because the index fund, just like the S&P 500, there's 500 stocks, even the Dow, the Dow 30. That's a nice way to diversify. If you really don't want to start picking your own stocks, just buy an index fund and invest in that index fund over a period of if you decide, like, every month I'm going to buy a couple of shares of this particular index fund. Yes, that is a way of buying a diversified or building a diversified portfolio. Yep. Okay. I guess that's we're heading towards 6:30.
This was a good topic.
Yeah, it was good. And thank you guys for coming. I appreciate your input and your time. I hope that you were able to learn something from this particular investor talk. And you can always get in contact with me by Marsha@informinvestmentclub.com.
Make sure you guys can talk with her.
Yep.
Or you
And
can visit the website.
or the
To definitely
website where
learn more.
we have courses there. We did put up we had a course, a dividend growth, we had a workshop, and that course is available on the website, as well as our 5-day crash course, which we're planning on updating.
Yes.
Sometime in the future, we'll be doing another
Very
crash
soon.
course in investing in the stock market.
Mhm.
And we'll definitely let you know when that's going to happen too.
Mhm. Awesome.
Okay. Oh, you're welcome. So Nancy, can you talk about fiduciary next time? And
Yeah.
then okay, yes, I will write that down.
I'm seconding that.
What is a fiduciary? What is their role?
It's good when you all comment and let us know what you want us to talk about.
Mhm.
And even after the lives, please don't be afraid to comment and still tell us what you'd like us to talk about.
Mhm,
Or if you
mhm.
have questions, we're definitely willing to answer them for you.
Right. Because this is going to be going on the YouTube channel,
Mhm.
the Bookworm channel, as well as Beauty Cut Right channel,
Yes.
as well as our Facebook page. You're quite welcome. And I think that's it. We'll say good night, have a good evening, and keep investing.
Bye, everyone.
Bye-bye.